Over the next 20 years, around $84 trillion is going to change hands, the biggest transfer of wealth in human history. And here's the brutal part. Study after study shows most of it will be gone within a generation or two. The families who keep it and grow it all have one thing in common. They own the right assets. An asset is simply something that grows in value or pays you while you sleep. And most people spend their whole lives buying the opposite. So today I'm giving you 10 assets that can genuinely make you wealthy over the next decade. And stick around for the last two because they're not things you buy at all. They're things you already own and almost everyone neglects them. Let's get into it. Just a quick reminder, nothing in this video is financial advice, it's purely for educational purposes, and you should always do your own research before making any financial decisions. Number 1. Stores of value. Gold. Let's be precise about what these are and what they're not. They are not get-rich-quick lottery tickets. They're insurance. Here's the thing nobody likes to say out loud. Every government on earth prints money, and every time they do, the pounds in your bank account quietly buy a little bit less. That's not a conspiracy. It's just how the system works. Gold has held its value for 5,000 years for one simple reason. Nobody can print more of it. Every paper currency in history, without exception, has lost value over a long enough timeline. Bitcoin is the modern version of that idea, a hard, fixed supply that no central bank can inflate away. Although this is very early stages and highly speculative, the smart move isn't betting the house. It's a small, sensible slice. Most people talk about 5 to 10% of your investments, so you're never 100% dependent on a system that can water down your savings overnight. Think of it as a hedge on everything else you own. Number 2. Renewable energy and infrastructure. This is quietly becoming one of the biggest money stories of the decade. The AI boom isn't just reshaping the world, it is unbelievably hungry for power. Every chatbot answer, every AI tool you use runs in a giant data center, and those data centers burn through a staggering amount of electricity. So the very AI revolution everyone's racing to invest in has a hidden requirement sitting underneath it. Energy, mountains of it. The whole world is rewiring itself, shifting from oil and gas towards wind, solar, power grids, batteries and data centers. And all of it has to be built, which means trillions of pounds flowing into it for years to come. The appeal is simple. These are real physical assets producing something the world will always need, often with income attached that rises with inflation. It's one of the more boring corners of investing. And boring, dependable, inflation-linked income is exactly the sort of thing that quietly makes people wealthy over 10 years. Number 3. Income-producing property. The classic British wealth builder, and for good reason. Here's why property is so powerful, and it's not just house prices go up. It's leverage. A bank will lend you 70–80% of the price of a buy-to-let. They will not do that so you can go and buy shares. So a small deposit controls a much bigger asset. Then someone else pays it off for you. The tenant's rent covers the mortgage. And 3 things compound at once. The property value rises, the rent rises with inflation, and the mortgage slowly gets paid down, turning debt into equity that's yours. Now, I'll be honest. It is not the passive dream people sell. There's tax, there's regulation, there are broken boilers at midnight. But one well-chosen rental in the right area, held for a decade, has made more ordinary people wealthy than almost anything else on this list. Number 4. Intellectual property. This is the closest thing to magic on the whole list. The idea is simple. Make something once, then sell it over and over and over. You write a book once, it sells for years. You build an online course once, people are still buying it a decade later. Here's how powerful that is. Elvis Presley's estate still earns over $100 million a year, decades after he died. J.K. Rowling didn't stop earning when she stopped writing. Intellectual property is the only kind of asset where selling one more copy costs you basically nothing. Everything else needs more money or more time to grow, but ideas don't. And this isn't just for the famous. The creator economy is already worth over $250 billion, and Goldman Sachs reckons it'll hit $500 billion within a few years. A really good course in a skill you have, a book that becomes the go-to in its niche, a digital product that solves one specific problem. The only real question is whether you'll do the work of packaging up what you already know. Number 5, your reputation and your network. And before you skip this thinking, it's soft and fluffy. It is one of the most valuable assets you'll ever build. Here's the reality. The biggest opportunities in life don't come from a job advert. They come from a single phone call between two people who trust each other. I know someone you should meet. I've got a deal that's perfect for you. That's how real money actually moves. Your network is a living asset. Invest in it, and it pays you back in opportunities, information, and access for the rest of your life. And it sits on top of your reputation, which is really just the answer to one quiet question everyone asks before they help you. Can I trust this person with my name attached? Every promise you keep builds it. Everyone you break chips away at it. In 10 years, the person with a strong reputation and the right network walks through doors that money alone simply cannot open. Number 6, index funds and ETFs. If you only ever act on one single thing from this whole list, honestly, make it this one. An index fund is beautifully simple. Instead of trying to pick winning companies, you buy a tiny slice of hundreds or thousands of them all at once. Like the 500 biggest companies in America or the entire world in one go. And here's the punchline that really annoys the professionals. Over any 15-year stretch, around 8 or 9 out of every 10 expert fund managers, people with teams and fancy degrees, fail to beat a simple, cheap index fund. The average quietly beats the experts. Why? Because index funds are cheap, they spread your risk, and they just keep compounding in the background. Put it this way, $10,000 left in an S&P 500 index fund 30 years ago would have grown many times over into the region of $200,000 today. No stock picking, no genius required. Wrap it inside a stocks and shares AISR, so all that growth comes back to you completely tax-free, and you've got the reliable engine sitting underneath everything else. Number 7, your children's education and legacy. Most money videos skip this completely because it doesn't have a price ticker and you can't check it on an app. But stick with me, because the numbers are genuinely sobering. A 20-year study by the Williams Group tracked over 3,000 wealthy families and found that 70% of them lose their wealth by the second generation and 90% lose it by the third. And it wasn't bad markets or recessions. The biggest single cause was a breakdown in communication and trust within the family, followed by heirs who simply weren't prepared. They got the money, but never the knowledge. The cash survived, the wisdom didn't. So the real asset isn't the inheritance you leave, it's what you teach. A child who genuinely understands money, patience, and how these assets work is worth more than any lump sum because they can rebuild a fortune, while someone who's just handed one tends to lose it. You can start tiny with a junior AI SAR that has decades to compound, but the real inheritance is the lesson, taught early. Number 8. Your own business and equity. Here's the hard truth about a salary. It has a ceiling built right into it. You trade your best hours for a fixed wage, and the moment you stop showing up, the money stops. A business flips that completely. When you own it, the upside is yours, and if you build it properly, it keeps earning whether you're there or not. And there's a hidden prize most employees never see. One day, someone might buy your business. A business making, say, £50,000 a year in profit could sell for 2, 3, even 4 times that in one lump sum, turning years of graft into a single life-changing payday. And you do not need to build the next billion-pound tech giant. You need something real that makes a steady profit and runs without you glued to it. The wealthiest people in almost every country on earth aren't the highest paid employees, they're owners. That's the whole difference. Pick a vehicle with no ceiling. Number 9. Your health. Stop. This is the one nobody in finance wants to say out loud. None of the other 9 assets mean a thing if you're not alive and sharp enough to enjoy them. Your health is your operating system. It runs every single decision you make. And this isn't just feel-good talk, it's financial. A 13-year study published in the Journal of the American Medical Association tracked over 1.4 million people and found the richest lived on average around 14 years longer than the poorest. 14 years! Because people who are fit and well think more clearly, make better decisions, earn more over their careers and, crucially for compounding, they live longer, which means more years for everything they own to grow. An extra decade of healthy life is an extra decade of your assets compounding. So invest in your body exactly the way you invest your money, consistently over a long horizon with no expectation of overnight results. Sleep, movement, real food. It is the quietest, highest return investment on this entire list, and it's the one most people trade away chasing the others. And number 10, your high-income skills supercharged by AI. Everything else on this list needs one thing to get going: money. And money comes from income, and the most reliable source of growing income is a skill the market values and can't easily replace. This is number 10 because it is the seed that grows everything else. And let me show you exactly what that seed can become. Invest £10,000 a year every year at around 10%, which is roughly the long-run stock market average, and after 30 years you are sitting on about £1.8 million. Now watch what happens when you raise the amount. Invest £60,000 a year, same rate, same 30 years, and you end up with nearly 11 million. Same maths, same market. The only thing that changed was how much you could afford to put in each year. And that comes straight back to your income. Someone on 30 grand saving 10% puts away 3,000 a year. Someone with a skill that pays 100 grand saving 20% puts away 20,000 a year, many times the fuel, feeding every other asset on this list. Skills like sales, software, marketing, financial know-how, leading people. And here's the multiplier for this decade: AI. Goldman Sachs estimated AI could automate the equivalent of 300 million full-time jobs worldwide. AI isn't going to make you rich on its own, but the person who learns to use it will quietly run circles around the person who doesn't. Someone who turns 8 hours of work into 1 is worth a fortune to any employer or client. So don't treat learning as something you'll get to once your money's sorted. It is the strategy. Raise your earning power, point it at the assets on this list, and the next 10 years start to take care of themselves. So there's your 10. And notice where we landed. The last two, your health and your skills, aren't things you buy. They're things you already own. And that's the whole secret, really. You are the most important asset you will ever build. So train yourself like an athlete trains for a season. Consistent reps, a long horizon, showing up on the days you don't feel like it. Here's the thing though, the gap between the people who get rich over the next 10 years and the people who don't is no longer an information gap. You've just been handed the list. It's an action gap. So pick 2 or 3 of these, start this month, and let the next 10 years do the rest. If you want to keep building with us, one move at a time, hit subscribe and I'll see you in the next one.